Hey everybody, I'm Phil Town from Rule 1 Investing, and today I want to talk to you about how you can retire before age 65 and live comfortably. So here's the thing, retirement planning is obviously something that can be kind of tricky, but I want to start out by telling you that it's possible to have enough money to retire early. You don't need to win the lottery. That's the big thing, right? Because that's good news. Or you don't need to have a big inheritance. You don't need anything like that. You just have to be smart and disciplined with your money. That's what you've got to do. So the first step you can take on this path to early retirement is to start living below your income. Whatever's coming in, you got to spend less than that. It isn't enough to just budget your money so you're not spending more than you're making. You got to take it a step further and you got to spend below what you're making. You got to hang on and keep the belt tight. And no matter if you're currently living comfortably or if you manage to increase your income, always buffer your budget. Live as if you're not making that amount of money. One way people do it is, they just get a raise and they don't spend the extra, and gradually this starts to open up a nice buffer. I worked in the Grand Canyon. I was making $4,000 a year, you guys. And at the time, what I had going for me is that I could live out of a duffel bag on that income. Everything I owned was in a thing about this big. So it was pretty easy for me to just keep the belt tight when I started investing and just save money and just kind of keep it all in the game so that it could get that high rate of return. So keeping your belt tight, what it basically means is that you analyze your income and your expenses, and then you just reduce that spending. And you got to ask yourself, what am I spending money on that isn't essential? And you start making your cuts there. I got a friend of mine that is all about, cutting out the lattes. And, David Bach is a great guy. And he's right, you could do that. But it's also kind of throughout the entire spending process. Often, the latte isn't the thing. It's just a kind of a metaphor. But throughout the spending process, you've got to find ways to cut it down. $4 a day may not do it, but $4 a day is $100 a month, right? Of course, when your spending goes down, your savings automatically go up. That's the idea, right? So it's best to first use that surplus money to do what? Pay off your debt. So debt's a big burden that can really prevent you from achieving your financial dreams. Interest on bad debt, like credit card interest, is stealing your money from you. It is absolutely compounding the opposite direction. So you're really losing at the rate of compounding, which is giant. So the sooner you can pay off debt, the more you're going to have to save for an early retirement. Now, there's good debt and there's bad debt, so let's be sure we understand the difference. Good debt, that's debt that's going to be an asset that's going to make money for you down the road. So good debt is education. Like going to college, that's good debt, as long as you don't just go get a degree in sociology. Or maybe comparative religion, like my daughter. So you got to have good debt, which is to basically create an asset that's going to ultimately make you money. Bad debt is buying stuff you don't need to impress people who don't like you anyway. So stop doing that. And that brings me to my next point. You should start saving as early as you can. And this is advice that I got as a kid, didn't listen to it. And then, of course, life intervenes and you got all these things you got to spend money on. But the earlier you start that habit, the more opportunities you're going to have to grow your money. And everybody will tell you that's true. It's a really tough discipline. I'm going to admit it. It's very hard. But every dollar that you can get in that retirement account now is going to make a huge difference for you down the road. And that is the power of compounding working in your benefit. I got to tell you, there's a great story about Warren Buffett looking down at a penny in an elevator. These other guys were looking at the penny. Buffett was looking at the penny. And everybody in the elevator was wondering if Warren Buffett, this billionaire, was going to pick up the penny. And he didn't. And the elevator doors open, he gets out, he turns around, he looks at the guys and then smiles and bends down and picks up the penny. And then he says, start of the next billion. And the fact of the matter is if you can learn to compound money at a high rate of return, which is what we think we can teach you to do, right? Following in the footsteps of this family of investors that Buffett has been teaching us about for 60 years. If you can learn to invest money like that, where you have a high rate of return, man, everything you can get in the kitty right now is going to result in a huge, huge amount of money down the road. So if you have to, you just start small. As long as you just start now. That's the critical thing. You cannot believe the impact of $1,000 now, 30 years down the road, if you've been compounding money at a high rate of return. So choose an amount of money to set aside that's just, it's comfortable, even if it's $5, just to start getting in the habit. Then, as you get more comfortable, you start getting more money from reducing your spending and you start paying down your debt. Then you start to increase that amount, just gradually increase it. So you get rid of all that consumer debt it's not buying assets that are going to, result in a high rate of return and cash flow down the road. And then that will increase the amount of money you have available that will result in cash flow down the road. Now, in Rule 1 investing, you guys, every little thing counts. And it'll only grow if you continue to work at it. And the reason every little thing counts is because we target a very, very high rate of return. We're looking at a minimum of 15% a year, which will double your money every 5 years, and we're targeting 26, which will double your money every 3. So when you start putting a pencil to that level of compounding over time, you can see how a guy like me starts with a little bit of money, like $1,000, and basically gets rich. So last thing is just you got to learn how to invest. There's no shortcut around this. You don't have to be a genius investor to be able to retire early. You just need to find a few wonderful businesses that can generate a really great return for you because you're buying them when they're on sale. Most people think that you can't do that, but that's all about fear. It's all about believing what the financial services industry is trying to do to you, which is to just make sure they keep your money. And it's all about not knowing where to start. So if you're already investing, you're on the right track, which is great. However, if you have a financial advisor, you're probably not making the returns that you could be making. The financial advisors all come from the same school, which is the School of Efficient Market Hypothesis or Theory, which basically says you can't beat the market. So they don't try. They don't train to try. They don't know the value of a business. They don't have any idea how to price a stock. They just diversify, diversify, diversify. Now, the key to retiring early isn't just about saving earlier, it's about putting your money into something that's an investment that can maximize the growth of that money. The velocity of that money grows and grows and grows at higher rates of return. You can start investing your money properly and take advantage of your investment accounts by making 15% a year with rule number 1. You can do it. Everybody out there can do it. I've had many students now who have doubled and tripled their retirement fund and are actually retiring early simply from using the Rule 1 strategy over a few short years. If you want to learn more about investing, there's a simple place to do it, you guys. Just visit my website and check out my free resources to get you started. Now, I'd love to hear from you guys. When would you like to retire? That's the question. So if you want to leave a comment below with your answer, I'll be sure and follow up with you. Really appreciate you watching. Now go play. And if you enjoyed this video and you feel it was valuable in teaching you more about investing, would you please subscribe to this channel and share the video with your friends or anybody else you think might benefit from this information?